Welcome back to the CNBC-TV18 HTFC Sky Election Headquarters. We are now joined by Nikhil, the Director and Senior Analyst at Bernstein, to discuss the power as well as the industrial space. Good afternoon, Nikhil. Thank you so much for making time for us today. First up, post the elections, we've seen quite a bit of a sell-off as far as, number one, some of the top industrial names are concerned, and along with that, quite a bit of a correction even in the power space. First up, I want your view on L&T, so that after that we can go to the power space. L&T narrative so far was on Saudi capex, but it's seen quite a bit of a correction today. What do you attribute it to?
Yeah, I think the entire story on L&T, it's on two fronts. One is Middle East capex and second is India capex. I think just the expectation that I think the market has that, with a weaker mandate that the infra capex could see some slowdown is what is impacting L&T. So order inflow growth is quite critical for an EPC company. So if that doesn't happen to the extent envisaged or guided by the company, which is 10% growth for this year, for example, then the company stock could be impacted. So which is what the market seems to be pricing in. We, although continue to be positive, we think it's a longer sustainable cycle on infra in India. And even on Middle East capex, we think it's sustainable. Near term, there could be some margin pressures here and there. But the longer story is definitely positive on L&T as far as we are concerned.
Okay, that is about L&T. I wanted to discuss the power space with you because we've seen a big cut yesterday. Do you think that was only because of a lot of them being PSUs and, the big fear that now PSUs will get derated? Or do you think there are some fundamental changes that we are seeing from here on?
So power stocks actually had rallied quite a bit. We think it's more just that factor, the rally which happened and the valuations at which some of the stocks were. Because fundamentally, if you look at the power sector, the heart of the power sector is power demand. And power demand growth, if you look at the last 2 decades in India, whether the government is NDA or UPA, it's grown at 0.8 to 1x of the real GDP growth rate. That, on top, there are new use cases of power in data centers, in electric vehicles, and even in green hydrogen per se. With that, we think there's a more upside risk to power demand than a downside risk. So we think the concerns on valuations could be slightly fair for some of the stocks, but the fundamental story of, power demand continuing, power shortage in the evening hours being a challenge are still there, are still relevant. Nothing changes irrespective of the outcome of the elections.
Nikhil, I also want to touch upon, the renewable space. Yesterday PM Modi in his speech mentioned that he continues to be very positive and he will stick to his stance as far as renewable energy capacity addition is concerned. Does that mean that thermal will now take a backseat, especially when you're looking at players in the thermal space, players like BHEL? They've seen quite a bit of a re-rating in the year and a half gone by on the back of thermal capacity addition. So how do you see the renewable versus thermal debate now?
No, fair question. The PM speech did highlight renewable specifically. But if you look at the challenge India has, even today, the results were out yesterday, even if you look at the power prices today in the spot market, they are as high as 10 rupees after 6 p.m., 7 p.m. in the day. So which means solar can't solve that problem. That problem of power supply in the evening time when the sun is not there has to be met by thermal. So hence, as per us, availability of power is the most important thing for any government. And if you have to solve for evening power shortages, you have to add thermal. You have to add thermal as long as power demand grows, as we expect, at close to 1x of real GDP growth rate, which is 5-6%, so or slightly higher. So thermal is inevitable. It's a necessity in India's context.
Okay. Nikhil, give us your view on IEX. How do you look at that particular name? And also, what are your top picks in the power sector now, considering that there could be some volatility and the kind of markets that we are in?
Sure. So IEX, IEX benefits on the volume front in the last few months as e-auction coal prices have come down, availability has increased. So volume growth for IEX could be good. We continue to be negative on the stock though, because we see regulatory overhangs for the stock. One regulatory overhang is market coupling. The second regulatory overhang are the transaction charges. So IEX charges the buyer plus seller 4 paisa per unit of power. which is actually quite high if you compare it to global peers. So European exchanges charge significantly lesser than that. So we do see a longer term risk to that. So near term, it could be good volumes for that, but the structural regulatory pressures on transaction charge, on market coupling continues over IEX. Hence, given those reasons, we continue to be negative on IEX. With regard to our top picks, we continue to like NTPC and Power Grid.
Nikhil, sorry to interrupt you. Give us a sense of how much India needs spend as far as power transmission capex is concerned. That will continue irrespective of whether it's thermal capacity or renewable capacity. In that context, how are you looking at Power Grid, and which are the other ancillaries or which other spaces will you look at favorably from the current play?
A fair question. So whether it's renewables or thermal, transmission is the biggest bottleneck globally. In India, we had done a good job earlier. Now, incrementally, it's becoming a challenge for us as well. So for transmission capex, our estimate is that there will be a re-rating happen. We think the guidance given by Power Grid is also on the lower side. If you compare our estimates to consensus estimates, our estimates are 30% higher on capex than consensus. We think interstate transmission capex could be 50,000-60,000 crores a year in India, and it's a multi-year cycle. The beneficiaries of this acceleration in transmission capex, one on the developer side is obviously Power Grid, building the lines, and then on the equipment supply, there's a long list. We would suggest being on the higher voltage players. So we don't have them in our coverage, but the high voltage players are essentially Hitachi Energy, GE T&D, Siemens, and CG Power. Those are the key high voltage segment players benefiting from the transmission capex acceleration that we expect in India.
Okay, all right. Thank you, Nikhil, for joining us today and making sense of what's happening in the power space. A lot of moving parts, important to get some expert opinion as well. With that, we'll take your leave on this edition of Mid Cap Radar, but stay tuned, your stocks when we return.